a company founded just 5 years ago by people who walked out of OpenAI, just filed to go public at nearly $1 trillion. That's not a typo. And the way they got there is the part no one is talking about. Last week, Anthropic closed a $65 billion Series H round at a $965 billion valuation. Days later, on June 1st, they confidentially submitted a draft SON to the SEC. No share count, no price, but the clock is running. This is widely expected to be their last private raise before hitting public markets, and it puts them ahead of OpenAI in the race to list. Here's what that funding round actually is, because the headline number is misleading. A significant chunk of the $65 billion isn't free capital, it's pre-committed infrastructure spend. Amazon invested billions. Anthropic agreed to spend $100 billion on AWS in return. Google did something similar. In venture capital, that means Anthropic's balance sheet and its burn rate are controlled by the same entities that just set its valuation. The investors and the vendors are the same people. That loop matters enormously for public market investors. When the SON goes public, they'll have to disclose actual revenue numbers and compute obligations. Anthropic's run rate revenue reportedly crossed $47 billion annualized as of last month. But the real question the SEC will force out is how much of that revenue is coming from the same companies funding and supplying them. That's not a scandal, it's how frontier AI has to work at this scale. But retail investors won't understand it unless they know where to look. 3 IPOs, Anthropic, OpenAI, and SpaceX, are now racing toward public markets at the same time. Combined, they could demand over $200 billion from investors. The entire US IPO market only raised $45 billion in all of 2025. The math on where that capital comes from is a real question. When the full SON drops, the mechanics inside it will matter more than the valuation number on the cover. That's exactly what we'll break down here at Fund AI Mentals. Subscribe so you don't miss it.